Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So whilst I'm within this self-quarantine situation this weekend, I wanted to just get one quick question answered that I received via email a few days ago, along with sharing some strategy related information and guidance that will hopefully add value for you all and help you to continue to grow as traders. So let's dive in. The question I received was in relation to an Ethereum short that I took about a week ago now, and I was pretty much just being asked how I managed to pretty much sell the top, and more importantly, how I managed to hold such a large trade. So firstly, let me show you the tweet that I posted, and this was 2 days after taking the trade itself. Now you can see my position on screen here in the screenshot that I posted, and the white dot that you can see here is exactly where I got in, where I got short. Now, to answer the question itself, why did you get in at that point? I was actually using my D1 swing strategy to look for short trades here that I could take in the wake of this mass market sell-off that we've had of recent. And I spotted this, and the D1 swing strategy had just triggered a short entry here that I'd missed. Now, usually if I've missed an entry trigger, I skip the trade, I walk away because I'm late in, and you know, a lot of the time risk reward is then skewed and there's better opportunities to be found elsewhere. But on this occasion, I saw that we were consolidating here, and I knew that I could fairly easily put a stop loss above the consolidation, get short, and you can see my stop loss here, and this then put risk reward in my favour. Now, I knew that worst case scenario, price reverses, I'll lose 1R. That's fine by me, I don't mind assuming the risk there. And of course, best case scenario, price continues down, follows suit with the sell-off, and I'm going to be on top of a winner, which is of course exactly what happened. So if I hadn't have had the D1 swing strategy to basically guide me here and help me select a market, I wouldn't have had a trade to take. Now, yes, I could have just jumped in short somewhere else, as we all know, pretty much every market was selling off at the time, but which market would I have sold? Why would I have sold it? Where would I have got in? Where would I have put a stop loss? And so on and so forth. Now, I say this all the time, and this is a really good example actually, but without a strategy, you're trading blind. You're pretty much left to just guess. But thankfully, with the D1 swing strategy in hand here, it actually allowed me to select a high quality market, identify a high quality trade setup, get short, and well, you can see what happened next. Price absolutely fell right through the floor, and I actually woke up the next day, which was when I posted the tweet itself, touching on a just below 10R win in open profit. Or in other words, if you're not sure what R means, I'd made just below 10 times what I risked on the trade. So again, as an example, let's say you risked £100 on this trade, you would have made just below 10R, which means you would have made just below £1,000 in profit, and so on for whatever your risk was or would have been. And you know, for a lot of people, a trade of that size, especially where we all are currently economically, everybody's out of work, people are losing their jobs and so on, the ability to capture those trades of that size can do a lot of good. And that's exactly what the D1 swing strategy is there to do. You know, it captures those huge market swings. Now, don't get me wrong, it generates losses and losing runs on occasion, like all strategies. But for me personally, these have always been my favourite type of strategy. Frequent small losses, infrequent, extremely large account building wins. And again, that's what this swing strategy brings in. And in fact, if you listen to my interview with my student Thomas that I uploaded here recently, I'll link back to that here in the top right corner. But Thomas says the same himself. And in fact, one of his recent D1 swing trades was just below a 13R win that we actually talk about together in the interview. So again, it's not just me banking the wins of this size. If you have the strategy, the wins are there waiting for you. And by the way, if you're thinking, that sounds like a strategy I need to be trading, I'll put a link in the description. Head over to the Join My Community page of my website, and you'll find a link to actually learn the D1 swing strategy over there. So Another question I got asked was, why did you choose the Ethereum market? Why not any other market? And the answer is most entry signals had actually triggered elsewhere already, and the trades had just ran way too far for me to then jump on board. Unfortunately, we really have seen some unbelievably profitable trades via this strategy this year. And if I just show you a few examples, you can take a look at just how strong this strategy is. So WH Smith here, and the entry trigger took place where you see the green arrow. That was where the strategy told us to sell short. Again, the strategy is completely mechanical, so there's no should I or shouldn't I here. The trades are crystal clear. And for those of you who have the D1 swing strategy already, you'll know exactly why we got short here. And a few of you might even have taken this trade yourselves. Future PLC here, and again, the entry trigger took place where you see the green arrow. And another, just a year maker of a trade here. Uber, again, the entry trigger took place where you see the green arrow. You get the picture, guys. This is what this strategy does. It gets us in at the peak of these just huge market swings. And in terms of capturing wins of this size, most traders, they just never experience them because they're jumping out of trades early due to not having a strategy that provides an exit signal. And therefore, they haven't got a clue where to exit, meaning they're almost always out of the trade early, losing out on the profits that we bank. Whereas, of course, we know exactly where we're getting out. The exit signal is provided by the strategy, and therefore we're always on board for the entirety of these moves, banking, well, as you've seen, just massively profitable trades when these swings occur. Now, let's talk about the current market environment that we're in right now, because some people are saying now's a brilliant time to be trading. Some people are saying the opposite. You know, now's the time to be not trading whatsoever. So what's the right answer here? Well, in my opinion, and again, this is purely my thoughts here, it's not a recommendation by any means, I would say it comes down to two things. So firstly, are you trading proven strategies that you know provide edge? And secondly, are they suited to what we're seeing happen here at the moment? And what I mean by that is, if you're trying to scalp reversals on an index with extremely tight stops right now, well, you're not going to do too well in a market where indexes literally just collapse on pretty much a daily basis, are you? Or on the other side of this, if you're trading a trend-based strategy or a momentum-based strategy like the D1 swing strategy, you're absolutely cleaning up at the moment, like I did on the Ethereum short. You know, that trade was very, very easy, a massive win for the strategy. But again, if you don't have proven strategies, you aren't getting anywhere. Strategy has to come first, or you're pretty much throwing darts in the dark, aren't you? You're gambling, and gamblers, as we all know, rarely win long term. So think about these two things. Are you trading strategies that actually provide edge? And are you applying the right strategy to the right market? Again, if you're trying to apply a trend-based or a momentum-based model to a really choppy market, you're in trouble. And on the other side of this, if you're trying to apply a mean reversion model to a hugely directional market, again, you're going to struggle. Yes, some strategies perform consistently at pretty much all times, and we've seen that recently with my pound dollar strategy. It's performed consistently all year this year, before the crash, through the crash, and that's great. You know, it's a fantastic strategy to have within the toolkit. We all need at least one strategy that's that consistent. And on the other side of this, you know, some strategies go through periods of weaker performance, stronger performance, and so on. But in the end, as long as wins outsize losses, you have edge and you come out ahead. That's the bottom line. Just trade with edge. That, it really is all that's required. And again, if you are now thinking, I don't have strategies that work, I know that I need to trade with edge to become profitable, can you help? Absolutely. Again, I'll put a link in the description. Head over to the Join My Community page of my website, and you'll find a link to learn any and all of my strategies over there. Anyway, I hope that helps. I hope that triggers some inspiration. I hope that's some valuable guidance for you all in terms of market conditions and where strategies perform best and why and when. I'll leave it there for today. And as always, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.